All right, guys, so I'm gonna do this quick video for you. Like I said in the group, you can't treat gold like a foreign currency, just like you can't treat um, you can't treat the pounds like other currencies because they move a lot faster. So typically, when people are trading like US 30 or gold, they typically trade it on lower time frames because it moves so fast. But also, I like to look at the overall picture on a larger time frame um, to draw my levels because it has a tendency to respect levels. Now, going back to this idea in particular, like I said, if you study the markets in general, almost every pattern is based on um, Fibonacci levels. Okay, some type of Fibonacci level, extension, etc. Okay, but if you look here, the entry here, I actually did this on a higher time frame. You see that I believe it was the 4 hour time frame is where I did this on. If you look here, just to give y'all a quick training on this Friday, you see that it respected the 618, which is a very, very solid, strong level. I like this. I call it the kill zone because typically when price comes here, it's gonna shoot up to that extension. Typically, not all the time, but it happens generally, and it's a very easy level for me to recognize on the chart as opposed to maybe getting a 50% or a 33, even though the 30, 38, 50, 61, that's all the sweet spots. I personally like the 618 retracements because you tend to get like a more certain and a more stronger move after that, depending on what you're trading. So if you look, you see that that is the 618. This is the whole point of the video. But if you drop down to the lower time frame, it's saying the same thing, but it is the gospel according to the 15-minute chart. All right. So even if you miss the entry here from the first 618 entry from the 4 hour time frame, when that pullback happened here and you wasn't sure when to get in, all you had to do was take your fibs and draw it from here to here. And if you look, well, you can't really tell because I have fibs already on here. Let me get rid of the ones that's here. All right, I'm gonna try to delete the ones that's here. Well, I'm just gonna remove everything because I'm not gonna save this anyway. All right, so this is where the pullback happened at initially. Okay, so this is the bottom all the way. Actually, hold on. Move drawing tools. Okay, here we go. So from here to this high, if you look right here where you see price go to the 618 again. All right, and then you could have rolled it up from there. All right, now the first took place somewhere around in here. This is the second entry. So even if you missed the first entry, which was there, you could have got in on the second one on the pullback. So when we say get in on a pullback, the best way to get in on a pullback is obviously you can draw your trend line to say, hey, this is a flag pattern. I'm going to wait for the break of the trend line, etc., and use the MACD. That's all good. But also use your Fibonacci tool here because typically gold is going to do a 618 pullback. You know, it typically does. And those are the ones I like to personally get in on. And if you would have got in on it and you see price start to move up, typically price is going to respect that level. And you can have a very tight stop loss as well. Like if you zoom in on this candle here, even after you got 1, 2, 3 consecutive bullish candles. So you could have put your stop loss right on the 618 or a little bit above it, and you could have had a very, very tight stop loss of about 20 pips, and you could have wrote this thing all the way up. So if I was to zoom out a little bit more just to kind of see where the pip range is from this 618 up to here. You at 272 pips. Okay. And when I do these, obviously I set my take profit based on different levels. Obviously, I took it all the way up to the extension, the negative 618 from the 4 hour. But you obviously can say, okay, well, this is a zone, but it looks like price is fit to take off and leave that in the dust. So if it does, it could possibly reject here at 1520 because there's a wick. So actually, all the way from wick to wick, if we go from wick to wick, technically, price is still in that zone. Okay. Once it surpasses that wick situation, if it does that, then I'm looking for it to possibly go here. This is your next strong area from here to here. So from 28 to 36. And if it comes through that, then it's probably going to go to the negative 618 extension. That's just me. Okay. Not saying that I'm 100% right, but that's pretty much how I do my things. And hopefully this helps. And I apologize for the slight grammar errors, but I've been up all night. But I wanted to put this video out to kind of show you guys the thought process behind the analysis because I'm not going to say it's simple and easy because it's not, but the main thing is whenever you do something, like I said in the group, you want to trust yourself, trust your analysis, trust what you see, trade what you see. If you don't see it, don't trade it. If you see it, trade it. All right. So later.